Welcome to the High Risk Payments Playbook, the podcast for partners and merchants operating in complex industries. If you're navigating chargebacks, underwriting challenges, compliance hurdles, reserve or volume limit challenges, and approval roadblocks, you're in the right place. Each week, we break down the realities of high-risk credit card processing, what works, what doesn't, and how to build sustainable payment strategies focused on revenue growth for industries where others struggle. This is where strategy meets execution. Let's get started. Hi, everybody. Welcome to the High Risk Payments Playbook. I'm Lisa, your host, as always, and I'm here today with Drew Webster, who is the founder of Elevate Strategy and Consulting, where he serves as a fractional CFO for growth-focused small businesses. He helps owners gain clarity around their numbers, improve profitability, and build the systems needed to scale with confidence. Oh, I love that. His work focuses on turning financial data into clear strategy so business owners can make better decisions and grow faster. Hi, Drew. Thanks for joining us.
Hey, Lisa. I'm glad to be here. I appreciate you having me on.
Yeah, of course. So, we are the champion of small business, right? We love our small business merchants and we love a CFO who can, give some advice. So tell me first, let's start with the good stuff. What do you normally see small business owners do right as they're looking to grow?
Well, that's a good question. What they do right, typically, the ones that have found that traction,
Yeah.
everybody talks about traction. The ones that have found the traction, they have improved their process and how they interact with a customer to a point where it's like clockwork.
Mm.
There's a lot of different moving parts and there's a lot of other things that maybe they have trouble with. But the one thing they do know is their business. And that's in any industry. If they're doing it well and they're sustaining their business, they have figured out what my ideal client wants and how to give it to them. I mean, it's as basic as that.
Okay. So you mentioned before they gain traction. Tell me what gaining traction means.
Oh, okay. Well, it means a lot of different things to a lot of different people. Gaining traction would be taking a break from that roller coaster where I made a sale and then it's been 3 months and I haven't done anything. And then we've gone up and we've done some things and then we're back down on the other side. And it doesn't always mean, and I hear this a lot, I'm not even paying myself. I'm paying my employees X, Y, and Z, but I'm not even paying myself. It doesn't always mean that. It just means when they've gained traction, there is a business that people know they can trust and delivers on whatever the product is that they say they deliver on. If it's retail, whatever that retail product is, they can rely on it. If it's a service-based industry, whatever they are expected to deliver, it's clear. The client knows it and they know how to sell it.
Got
That's
it.
what I define as you've gained that traction.
Gotcha.
Things aren't up to chance at that point.
So it sounds like the very first thing they need to do right is figure out how to be consistent. Yes?
As a startup business, yeah. I mean, if you're looking to, a lot of people have these ideas that I'm going to do X, Y, and Z, and it's going to be great. I did this. I started as, hey, I'm going to be a fractional CFO, and it's going to be great, and everybody's going to respect it and love it, and they're just going to want to flock to working with me. And that's not how that's not how the world works. Right. I need to understand my process. I need to understand how I can impact the client. I need to understand what they need and what they want and where they are.
Mhm.
There's just so many steps that go into starting a business and then sustaining that business. That first step is just truly identifying who you are, who you serve, and how do you solve the biggest problem of your ideal client.
Okay. Can you give me some examples you've seen about how people do that, how they narrow or even go through the process of getting to their ideal client? Like, do they look at demographics? Do they look at geography? Do they know what their income range is for their customer? Like, what data or information do they look at?
It depends. It depends again on the type of business it is. I mean, if you're selling coffee, obviously you're going to have a very specific niche of people that I'm going to have. I have people that drink coffee, and I can do iced coffee, or I can do hot coffee, and where do those people live? I mean, that's pretty simple. If you're selling a service, whether it's a bookkeeper, a CFO, HR, marketing, Those people are living in different, all those businesses, especially business to business sales, are living in these different roles and they're busy in those businesses. You got to go find them. But like defining who that is like super, super important, but it
Mhm.
doesn't come with, it's just, sometimes it doesn't happen naturally. I thought I was a CFO for an auto lender. I thought I would be in automotive. That was my initial, this is gonna be so easy because I'm just gonna go to all these different contacts and people that I know, and in automotive it's gonna be great. It didn't work. It didn't work the way that I thought it would work. And
Mhm.
I had to, through trial and error and a lot of failure, quite frankly, realize, huh, okay, they didn't need or want, or maybe I wasn't pitching this in the best way possible, but these people seem to resonate with what I was saying, and let's see what we can build off that. Sometimes it happens like that. Sometimes well, that was a good idea. Let's see if we can expand on that. In fact,
Mhm.
in any service, I would say solve a problem for somebody. If it goes well, see what went right, see what went wrong, make the things that went wrong a little bit better, and see if you can kind of go down that path.
Oh,
Unless you just have this great idea and it just resonates with everybody and you know how to sell it. But, my experience, not many people are just it just fits like a glove like that. You gotta
okay.
go through a lot.
All right. So we have a business. We've narrowed our total addressable market, our TAM. We know who our TAM is. We know what our products are. We think we know how to sell them. What then are the biggest mistakes that business owners make?
There's a lot. And it doesn't and I don't blame anybody for doing it because everybody goes through this. It's almost like, you don't really know how to raise a kid until you start raising them, you know? It's just things happen,
Mhm.
you you're just trying to keep them alive, and then once it gets a little bit easier, then you say, "Oh, well, this is the way to do those things."
Yeah.
With businesses, you get a product, and let's narrow it down to maybe, a retail product. You're designing this product, you do the R&D, and you decide, all right, I'm going to introduce this to the world. As that starts to build and you start to grow the client base and you start to grow these, the biggest issue is not being, what's the word for it? I'm just completely drawing a blank, but like being concise on your data. Make sure you're doing it effectively and not just kind of throwing things against the wall and not worrying about where it's going or what impacts it has. The biggest, where I see that kind of rear its ugly head, is bookkeeping. Somebody gets together, they start running their business and it's going well and they seem to have money in the bank and things seem to be okay, but they don't truly know how they got there. It just kind of accidentally happened, right? It
Yeah.
happened. They had a good product, they knew they had the right vision. But things are starting to progress and they're not really sure why. Well, why? Because in the bookkeeping, there's 1,000 different lines. Things aren't categorized correctly. Things are kind of just all over the place and it's just a mess. And if you can't clarify or have clarity in your books, then you're going to have issues down the road. It may not be tomorrow and it may not be 5 years from now, but it will happen. And I've seen it happen.
Yeah.
And the only way to fix that is by going either all the way back in time and reclassifying everything and making sure it all lines up, or
Mhm.
trying to do better from that point forward. Either way, it's expensive, it's tedious, it's a big, big, big mistake.
Mhm.
And you can fix that by being structured from day one. As hard as that is, being structured from day one and starting with, this is going to work. I'm going to succeed. I need to make sure all my ducks are in a row as I kind of build off of that foundation.
Okay. So it sounds like one of the pitfalls of business growth is that people don't start with organized accounting from the beginning.
Gosh, yeah. It happens all the time. I mean, just you get into business, again, coffee analogy. You get into business because you love coffee and you're great at making coffee. You don't know how to run the business. You know how to make the coffee.
Right.
Lawyers, they don't know how to run a business, they know how to practice law.
Right.
Engineers, architects, they're great at what they do, and that is a very mentally exhausting, draining industry to be in. That you have to learn a lot, you gotta get good education, but you don't get an education in business. And so they do it the best that they can, and things are kind of patchwork together in a lot of cases, and they work good enough. And
Mhm.
good enough is good enough for right now because we're still
Mhm.
progressing. I'd rather you do something than nothing, right? Because
Right.
otherwise, there's no business to run. But there comes a point where you hire employees, or your work has outpaced, the clients have outpaced what you can do, without optimizing it a little bit. And quite frankly, that's where I come in. Is I see a lot of that, right? It's
Hmm.
Okay. We've got all this stuff and all these different moving parts, and I really, really want this to grow to that next level. But there's so much just backlog of work that we've got to put in place because we're not organized. So I guess if you could boil it down to one word, being organized organization from day one, that's would pay. I mean, it's probably worth tens of thousands, maybe hundreds of thousands of dollars over that first 5 years. It leakage, just
Yeah.
business leakage. What you
Yeah.
could be gaining, you're losing because you're having to go back and figure all this stuff out that should have been figured out from the beginning.
Mm. Wow, that's great advice because that's super tough for some
Okay.
people. I as a payments person, you already know this, but I've been in payments for better than 30 years. I cannot tell you, and this is not a joke, I cannot tell you how many times I walked into a merchant's store or office or what have you. I asked them for a statement for review, and they open their file cabinet that's beautifully organized and they rifle through and they pull out a couple unopened envelopes. They hand them to me because they can't read the statement. It's complete gibberish to them. They have no idea what it means. All they know is that at the end of the month, they're going to be debited for their fees, and they make sure that that number is put in their QuickBooks or what have you. And the rest of it is just, Japanese to them.
Sure.
Literally, I can't tell you how many times. So, my question to you is that still the case? Do people still sort of ignore their payments, fees, and structures and all of that?
Yes, 100% yes. And we've
Okay.
talked about this before,
Hmm.
but the vast majority of people, again, you hit the nail on the head. The statement that you get from most processors is just nonsense. There's
Hmm.
40,000 different fees and there's different classifications of those fees. And well,
Hmm.
there's a percent for this and a half a percent for this. And you look at it, you try to understand it. And well, just the way that our brains operate, just in general,
Hmm.
you take a look at all that stuff and it becomes overwhelming as you're trying to go through it, you're trying to make sense of it, and there's a certain point where you just kind of snap. And if you reach that point, it's like, I don't understand this. I never will. We're gonna put this, bundle it up, and we're gonna throw it in the back of the filing cabinet and whatever. It's working good enough, so it must be fine.
Hmm.
Which
The thing about that just really bothers me because, like you, I focus on business growth. And I very often find myself consulting with our merchants about how to use payments to grow their business. And it's a completely missed opportunity. They have all this data in their statements that admittedly they don't understand, but also they're not asking anybody to decipher that for them, right?
right.
You are very smart to have someone who I know that can help you. Like if you get a merchant statement, you send it over and you just say, "Can you help me figure this out?"
Sure.
And then, which is step one. And then step two is a consultation with that merchant about how to use payments to grow their business. And what that says to me, and I'm assuming to you also, is that it's a wildly open missed opportunity, right?
Yeah.
Because they very well could be cruising along. Maybe they're paying too much in fees. Maybe they're taking cards without the card present and they're set up to take the cards like they're present. So they're getting higher fees because they're just not set up properly. Sometimes they want to move into e-com space, to have another stream of revenue, but they don't know where to start. They don't know what those fees are. They don't know how to get that done. So they just put it off and put it off, right? And and then here are some merchant services people who know what they're doing and could be a valuable resource to them, and they never tap us with any questions or looking for advice or anything.
Yeah, look, when it comes to insurances and it comes to these different products that you have to have as a business, I always recommend shopping these things at least every 2 years. I mean, there's a hopefully we can do it every year just so we can
Mhm,
price match and make sure that things are
mhm,
covered the way that we're trying to cover them. But like
yeah,
as a job, as a CFO for any business, fractionally or working in that business, my job is to optimize growth and manage risk. And
mhm,
those two things can destroy a company from the inside
sure,
out. Part of that risk, I mean, on the merchant services side of things, there's usually an opportunity with every client to look at those, like
mhm,
to your point. and say
Hmm.
there's probably something where we're getting overcharged, or we could take a look somewhere else that could either match this or make it easier on us. But to the other side of things, managing risk, you had even mentioned to me the amount of potential risk with some of these bigger providers, and depending on your industry, obviously, I mean, it could ruin your whole business because what happens if you can't process a payment tomorrow and
That's right.
95% of your business is, debit or credit transactions.
Mhm.
Now, I have been a part of negotiating just in a prior life, I guess, negotiating processing fees with different merchants and kind of going to three or four of them and trying to figure out what is going to offer me the best protections and cheapest price. But in that, I learned there's like 15 different. I don't even know how to really decipher all of these things. You've got the gateway and you've got the visas and the mastercards, which I know there's a term for them, and then you have the processors, and then there's just all these different. There's just too many moving parts, and I strongly recommend speaking to somebody, Lisa
Hmm.
or otherwise, about what in the world is all this? What does it mean? How can it impact my business? And
Yes.
then what can I do about it?
That's right, 100%. My advice to a business is to review their merchant services statements at least once a year and compare it to a year ago. Are the numbers bigger on the recent statement? And if so, why? Meaning their fees are higher. Why? Finding somebody in the industry that you trust that can just look at your statement and help you understand it, right? I spend a lot of my day doing that. Merchants reach out and they said, "Can you help me figure this out?" I'm like, "Yeah, of course I can." So, you know, e- every CFO, fractional or otherwise, should have a merchant services partner that will do that for them, I
I
think.
agree. I agree.
So you are a data guy. I am a data girl. We both love, making informed decisions. Can you give me some examples of like if you're bringing on a new client and you're looking at their, let's say, QuickBooks, and it will just say it's organized in this case. What does some of that information tell you? Like, what are some cues to you that merchant that business needs to make some changes? Like, is there a they're spending too much on product and they should be negotiating the cost of their product down, or what kinds of things do you look at with any of your merchants and have given advice about how to make them more efficient?
In the context of the businesses, I'm looking at QuickBooks, I'm onboarding a client. The first thing that I'm going to look at is historical data and how it's performed year over year, month over month. So we are 2021, we were here, we were charging this, we reached this amount of revenue, we had this many clients, there was this amount per client in revenue, all things that you can gather by just doing the math, obviously. But the vast majority of people are not looking at it like that. You've got all those functionalities in QuickBooks and nobody's really using it. They're entering the invoices, they're entering their expenses, they're typing in transactions, they're doing whatever. Maybe they look at the accounts receivable to see if somebody's past due or whatever, but there's not really like a process.
Mm.
So the first thing is kind of clarifying, okay, these are your numbers. Here's where you were. Here's how you got to this point. Here's where you are now. Just by doing that, I mean, you can identify in some cases 10, 12, 15 things like, hey, look, we need to dive in here. In fact, that's how when I onboard a client, this is my first phase is
Mm.
I need to understand your business from the numbers. I don't really care what you're selling. You could be selling a wash machine. It is what it is. I'm looking at the numbers. Your numbers are saying you started here, you reached this point here. However, your pricing has roughly stayed the same or gone down while your expenses have increased by 20, 30, 40% more than what they were before.
Mhm.
As you start to look at those numbers, you start to see, well, okay, there are some glaring holes in the future of your business and the scalability of your business.
Mm.
So that's, priority number one is Mr. Client, do you understand where you're at and where you are headed? Where do you want to be headed?
Mhm.
And let's figure out how we're going to fill in those gaps.
Hmm. So this fascinates me. So other than the obvious, like revenue is decreasing, that's an obvious. What are some of the signs that a business is headed in the wrong direction?
It's more often than not, it's in pricing.
Hmm.
There is a lot of I'm doing things based off a gut feeling. I don't really feel like I should be raising my prices because I don't want to upset my customers. I'm increasing my revenue. It's continuing to increase, but I feel like I'm overwhelmed. I don't know that I have that much more cash in the bank. There's a lot going on and I'm trying to sort it out. Well, what
Mhm.
that typically says is my pricing has stayed stagnant over the last 5, 10 years. My
Mm.
expenses have increased
Mhm.
along with inflation, along with that. I mean, heck, in the past 6 years, we had COVID, and you're dealing with the war in Iran. You're dealing with these things that are kind of ebbing and flowing the inflationary causes in the market, which are impacting your prices on how what you pay. But yet you're not changing anything that you're charging your clients. I mean, it just does not make sense. And if you're going to scale this business, you're going to continue to do more and bring in more money, but spend more. And it's eventually going to reach that inflection point where they hit each other, and now you're broke. And there's just a lot of people don't see that because they're
Yeah.
not looking at this from the lens of let's take a look at how we have compounded growth year over year.
Wow.
I
Okay.
would say that's one of the biggest things that you looking at something, you say, okay, has the pricing increased? Has it increased along with the increase in expenses, or are we going the opposite way?
Okay. See, yeah, I would have never guessed that. So I'm glad I asked that question. I got some information today. Okay, that was great. We that's a lot of information for our audience. Before we wrap up, do you have any just like nuggets of advice for anybody who might be listening about other than being organized with your books and your finances? Anything else that like any business owner should be concerned about? I heard pricing. What else? Just sort of top of
Yeah.
mind
I got a
things.
couple of things. Oh, look, I could talk all day about this. I
Okay.
live and breathe this stuff. But the biggest thing is, and this is something I learned with experience as well as obviously I'm in this role, but you need to be able to rely on consultants. I'm a big believer in consultants for the sheer fact that you are an expert at your business and what you do, and you're probably not an expert in some other areas, whether
Mhm,
that's marketing, whether that's HR, whether that is finances, whether that's a CFO, whether
mhm,
anything. If you have a weakness in that position or in some part of your business, don't expect to just figure it out. Rely on the people who have been there, who have done that, and who can help you get there quicker. Because you're fighting against time. Everybody is, right? I mean, I don't remember the statistic, but they say most businesses fail within 5 years, something
mhm,
like that. They haven't
mhm,
adapted. You're growing, you're going to get better, you're going to and then you're going to reach a plateau. And the way it was explained to me was you have these little these hills that you're climbing. You climb the top of one hill, which becomes the valley to the next hill. And you're
mhm,
going to have to break through that ceiling in order to get to that next level. And you're going to have to do things differently in some ways, whether you do it or you hire somebody to do it or you figure it out one way or the other. And your whole business is a constant cycle of that up and then we plateau and then up and then we plateau. So if you don't rely on consultants or employees or whatever, then you're gonna have a hard time unless
hmm.
you're Elon Musk and you can just sort out everything just from being the
Well,
smartest person.
sometimes a seemingly infinite amount of money solves some problems.
That's absolutely true. That is
Yes.
absolutely true. And I would say the other thing is don't be afraid to spend money on acquiring clients. And I see this a lot. Businesses kind of grow by word of mouth. They grow by the owner is the cog and they're doing networking and they're doing whatever. They're trying to sell their product. But there reaches a point here where you have a lifetime value of a customer. Let's just say you're in the service industry and each customer on average is paying you over their lifetime maybe $20,000. When you onboard a client, that client is worth historically $20,000 to you.
Mhm,
What would you pay if you knew if they were giving you that $20,000 today? What would you pay in order to acquire that client? Would you pay 1,000? Would you pay 2,000? Would you pay 10,000? 50? You're gonna get 100% return if you put $10,000 into it. I mean, it sounds pretty nice when you look at it from that perspective. But so often I see customer acquisition is basically zero. They're bringing in a ton of money based off of the amount that they're spending on acquisition. That's not a good thing. They're not spending enough to acquire customers, and you will
mm,
stagnate growth, and you will not reach the level that you wanted, that you said you wanted, if you don't
mm.
do something about it. Don't be afraid to spend money. The lifetime value of a client is going to tell you this person is worth double what I just spent, 5 times what I just spent.
Is there a formula for that, Drew? Like so much of your budget? as a whole should go to acquisition or a percentage of your average lifetime value? Is there some sort of formula?
Yeah, you can put together the customer acquisition cost, which is essentially all the money you spent on acquiring customer or acquiring a customer divided by the number of customers you acquired. And you can divide that by the lifetime value of an average client, and you can get a formula. So the lifetime value versus customer acquisition cost, and let's say it's 5 to 1. So for every $1 I spend in advertising and marketing, I'm going to receive $5 back.
Mhm.
That's a fantastic return. In fact, that's where I want you to be. I want you to be somewhere between 3 and 5 to 1. We're spending a healthy amount, but we're also acquiring, and our lifetime value is really telling us, hey, this is worth it. If you're 200 to 1, if you're 500 to 1, if you those numbers they're not sustainable. You can't do this for free
Yeah.
and expect to grow at the pace that you want to grow at.
Yeah. Oh my God, that's fantastic advice. Love, the proof is in the pudding and love is in the details. I
Oh
love
yeah.
detailed conversations.
I do too. I nerd out on this stuff too, and I know it, but this is one of my most fulfilling things about my business is I get to jump into somebody else's business, their passion, they've spent a lifetime building something, and you could see pretty quickly, like, here are some things that I can improve on, but like, I don't want you to change what you do and what you're passionate about. I just want to help you get there a little bit quicker. And
Mhm.
it's cool to see how people operate, how things work, and it's just a fun business to be in.
Nice. I love that. Drew, phone number, email. How do people get a hold of you?
I've got a website. It's elevatescgroup.com. Email, absolutely fine. Phone number, sure. Call at any time. Give me a text, whatever. My phone number is 678-617-4102. And my email would be drewwebster@elevatescgroup.com.
Awesome. Thank you so much for talking
Oh,
to us and sharing some really valuable advice for a small business owner. God love them. We want them to succeed so badly. They just have to get out of their own ways.
that's right. I appreciate you having me on. This was a fun conversation.
Yeah, it was for me too. Thanks so much, Drew.
Absolutely.
Thanks for listening to the High Risk Payments Playbook. If this episode brought you value, share it with a partner or a merchant who operates in a high-risk industry. For more insights and resources, please visit us at zenti.com. That's ZENTI.com. Until next time, operate with efficiency, process smarter, and stay ahead of risk.